Hello, Wolfpack. We're going to be talking about interest rates. We're going to be talking about whether they're priced into the market, and we're going to be talking about what the effect of low interest rates would have and high interest rates. So, for those of you who don't know, I think a lot of you would know by now, but for those of you who may not be familiar with what they do, interest rates are potentially being risen in March, and that's coming in on March 15th, right? The Federal Reserve is holding a meeting. They're going to discuss that. They're going to release their verdict. Now, we've had historically low interest rates for a historically long period of time, and essentially what low interest rates does, for those of you who might not know, it encourages inflation. It also encourages market growth. And it makes it so that the Federal Reserve and the government is able to pay back their debts at a much less strenuous rate. Now, high interest rates are actually a necessity in times of, the threat of inflation, right? Because high interest rates encourage kind of dimmed market growth and also dimmed inflation. So, as a government, as a central bank, if you wanted to fight inflation, one of the best ways you could do that is bring up the interest rates. So raise those interest rates, right? Now, this is why the decision is so important, because as you guys would know, I mean, everyone in crypto would know this, that inflation is becoming a problem. It's the elephant in the room, and very much has been kind of dismissed in the past, but now the Federal Reserve is saying, hey, we need to actually address this, and they're considering raising those rates. Now, a lot of people would say that this is priced in, right? A lot of people would say that high interest rates, as I've said, if they raise those interest rates, it's very likely we enter a stock market correction, which would lead to a Bitcoin correction, okay? And potentially even a recession in the global financial markets due to how far this has gone in terms of the inflation scenario and how bad the economy has actually got. So a lot of people would say that, hey, well, it's pretty much guaranteed that the Federal Reserve is going to raise those interest rates, and hence it's going to be priced into the market. Well, I would disagree with you on that. I don't think it's guaranteed at all. I mean, they've maintained these low interest rates for a period of time in which I would never have predicted. Throughout this entire COVID kind of outburst, since the start of 2020, these interest rates have been very, very low, and even before that, they were quite low. And so, to say that it's priced into the market, it assumes that the Federal Reserve is actually going to follow through with what they said. And these guys are notorious for lying, and they're notorious for changing their opinions and speculating. And so I think that it's kind of hard for it to be priced in fully. And now, what I would also argue as well is that, well, looking at something as major as interest rates being risen in a time of economic turmoil in which we could potentially actually go into a recession if those rates are risen too much, or if it's just not right, we could literally enter a stock market recession here. And so looking at what you consider priced in, a lot of people would say, well, it's priced in already. It's like, okay, really, is it priced in? We corrected for like literally 2 weeks, and we corrected down 12%, and then immediately went back up. So it's a 10% correction in 2 weeks. That's priced in. Do you think that's priced in? And now we're pumping already. We've moved up 6% from that. And so from the total high, we're down 6%. Like, do you think that is priced in? Do you think that those interest rates being risen to price in a 6% correction? I don't think so. That's a normal market correction. I mean, we see 6% corrections all the time, even when nothing major is happening. And I would argue that this is one of the most major points in kind of history for the Federal Reserve, at least for the last couple of years. I mean, this is a crazy important moment. I don't think people fully grasp the situation when they say that, hey, it's priced in. It might be slightly priced in. Obviously, there's a little bit of selling going on, a little bit of people taking a bit of precaution here. But to argue that it's fully priced in, they're not going to see any repercussions of those interest rates being risen, even by a little bit, even by 0.25. It seems illogical to me. I don't think it's priced in. I don't think it can be priced in, because I don't think the decision is certain. And so the reason why this is bad, right? And let's pull up the DXY. Now, the DXY, as you guys would know, and maybe you don't, right? And that's why I'm here to explain it to you. Is a chart that kind of measures the strength of the US dollar in relation to other global currencies, or some of the top global currencies, I should say. And so when you're looking at something like the DXY, what you need to notice is that this is actually correlated to Bitcoin as well. Now, when the DXY is going up, as we could see from when the bear market started on Bitcoin in 2018, which is around this period here, right? The DXY actually bottomed out in January 2018, which is when Ethereum bottomed out in 2018, okay? And we moved upwards in an upwards trend until around May 2020. Now, May 2020 is when Bitcoin started moving up again. So you will notice a strong correlation here, right? When Bitcoin was in a bear market, this thing was moving upwards. When Bitcoin started moving upwards past May 2020, all the way through to May 2021, Bitcoin was moving upwards. So when this moves down, Bitcoin goes up. When this moves up, Bitcoin goes down. That's a general correlation, very strong correlation. Actually, if you look at it even on a weekly candle level, you can see the correlation is quite striking. Now, what I would say is that this is in an upwards trend right now. This is kind of part of the reason why Bitcoin is kind of struggling to have some growth, because the USD is gaining value against other currencies. And that's inherently bad for Bitcoin, because the whole kind of thesis of Bitcoin relies on the USD being weak and Bitcoin kind of, replacing those global currencies, or just in general weakness in the US dollar does encourage Bitcoin growth. And so getting into that too technically, you don't really need to. You just need to understand at a base level. But what I would say is that, well, if the stock market does correct further by, via a interest rates being risen, and that might not happen, keep that in mind. If they keep them low, then the stock market will just keep going up, right? Because inflation will just cause that to keep skyrocketing. But if they do rise those interest rates, there's going to be the threat of the US dollar gaining value against other currencies, right? And that's pretty much a given, right? Because if the stock market goes down, the DXY goes up. That's generally how it works, right? There's a strong correlation there. And as I just explained to you, if the DXY goes up, Bitcoin goes down. And so this is one of the reasons why, well, we need to be cautious just past the level that it's a news event. This is a news event that can have massive macro effects on the market. And looking at the DXY chart right now, I mean, we've seen a double bottom formation. And I know TA doesn't really work particularly well on things like this. Double bottom formation and a cup formation going into resistance here. And we've also held, well, the 200-week SMA for support as well. And so that, it looks good. It looks good. It looks bullish, and that means it looks bearish for Bitcoin. And so I think that, speaking about interest rates, and I hope kind of I've covered a few questions in this video already, but speaking about interest rates, I think that the overall kind of point I'm trying to make in this video is that, the threat isn't over. To say that it's priced in, I don't think it can be priced in because it's not certain. It's not 100% certain to happen. So how can people predict it? It's like, yeah, you can predict all you want. You might be wrong. Right? So there is going to be some effect in the market. And, I don't think this is one of those situations where you're going to see a buy the news event. I seriously just don't see it. Not with something like this. If you're talking about like a coin being adopted or something like that, that's when you can apply that kind of logic. But this is a major macro event. It goes past cryptocurrency. It's not about cryptocurrency anymore. And if we do enter a global financial recession, or even a recession in the USA, which would be a Western financial recession, or at least even just a 20% correction in the stock market, which is really nothing. That could have detrimental effects on Bitcoin as the DXY heads above resistance and Bitcoin's already in a bad place. And so that could seriously damage the state of Bitcoin right now. And I think that this is a point in time in which a lot of people who might not know too much about the macro situation and might just know a bit of TA would kind of brush this off, would say, hey, Bitcoin's moving up now. We're getting past the downwards trend. It doesn't really matter. This little event about interest rates, who cares? It's not going to have much of an effect. It'll be a buy the news kind of thing. I think it's all very dismissive. And when you actually look into how much effect this can have on the financial market, we've seen it before. We've seen it in history. It actually does have major effect. And when you look into the fact as well, and just use logic and determine that, well, Bitcoin has never been around for a global financial market recession, or even an American market recession. Bitcoin has never been around for that. And so, how would Bitcoin react? We don't know. Would Bitcoin pump? I probably not, right? Because people won't be worried about Bitcoin. They'd be worried about how they're going to get the next bloody meal on the table, how they're going to keep their job. And so I don't think it's an event to be bullish about. But I suppose the thing is, it's like we don't know how it's going to react. We've never been in that period of time before. I think at least initially you could kind of be certain that, well, it's going to go downwards. And so, how much does TA actually matter with an event like this? If we do enter a recession, how much does TA actually matter? Could we just go down? Could we just go up? Who knows, right? And so I'm just trying to paint the picture of like the uncertainty that's going on in the market right now. Going into this major event, I think that the best case scenario for us as investors and as traders, right, is just wait, just hold your horses, right? It's literally a month. It's a month and a week away. It's like 5 weeks away. You have to be able to learn at some point that sometimes patience might be the best option. Now, obviously, trading's fine, right? Trading in which you might be out of the market by that period of time, trading on the 1 week time frame, trading on the daily time frame, that's fine, because by the time, that event actually takes place, by the time those interest rates have risen or even stayed the same, you're going to be out of the market. But in terms of taking a long-term position here, I would be very, very, very cautious unless you're fully educated on the macro situation. And even then, you don't know how Bitcoin and cryptocurrency is going to react here. So just be cautious, guys. A lot of people would like to say, as I said, a lot of people would like to say that it's all priced in. I have my doubts. Whether I'm right or not, I think that caution will prove to be the best kind of course of action here. It's not about me being right. It's about me saying, I don't know. So if I don't know, why would I buy a long-term position? Just doesn't make sense. Anyway, thanks for watching, guys. Hope you enjoyed. Hope you learned something, and I'll catch you in the next one.